Good morning, I'm April Gerdes with the Mortgage Advantage, and today I would like to talk about credit. This morning I had a real estate agent call me because they had a borrower that went to a different lender and got pre-approved a couple of months ago for a home loan. Well, now that they finally found a home and placed an offer, the lender pulled their credit again and the scores have dropped, and the borrower no longer qualifies for the home loan. So the real estate agent's question to me was, number one, how could this happen? Number two, what can be done? Well, as you know, credit does run the gamut when it comes to the lending industry. And with that being said, some of the options that you can have are, one is called a credit analyzer. Most lenders can offer this, and it's basically a very detailed printout that lets the borrower know what exactly they can do to get their credit score raised. And sometimes it could be paying off things of that sort. The other thing is called a rapid rescore. And what that is basically if the borrower goes through the process from the credit analyzer and does all of those steps, they can get their score rescored usually within 7 business days. Now, one of the things I want to talk about are some of the myths that are involved with credit scores. One of them is no credit is a good thing. Not in today's world. In fact, most lenders are going to require that each borrower has at least 3 open trade lines. The next one would be high balances on credit cards reflect that you have got love from the credit card agency. That's not true either. In fact, if you have a high balance or worse, even over your balance, that could hit your credit as bad as a collection. Another one would be high credit limits are not a problem. You know, back in the day they didn't used to be, but with our economy, a lot of the banks are cutting your balance without you even knowing. So say you had an $8,000 limit and you only owed $4,000 on it, you'd be good. But if your bank all of a sudden dropped it to $4,500, now you're almost maxed out, and that can drop your score as well. Another one would be closing my credit card improves my score. No. Remember, you want to have open trade lines. So if you have credit cards, spend a little bit, pay off every month. Another myth is paying off collections. Boy, paying off old collections can dramatically drop your score because it can reactivate the account. Also, just another thing to think about are things that are given in the divorce decree. Let's say you get divorced and your ex was responsible for the Discover card. Even if it says that in your divorce decree, you need to go to Discover, and get your name taken off that account, because lenders do not care what the bank decree says, the bankruptcy decree says. They basically want to see what's on your credit and not on your credit. And the last thing I can say is, the best thing to do is get involved with all 3 of the bureaus, Equifax, Experian, TransUnion. Sign up with them, pay their annual fee, and watch your credit, because they will let you know if something new is on your credit, if you're in danger, or if there's an inquiry. So that is all I have to say about credit today. Thanks.